All right, I think we're live. So thank you everyone for joining in another community call for Sky Ecosystem. So we'll have Rajiv from Viridian, and he'll continue his regular segment on the accessibility rewards and the ecosystem engagement that we've been seeing every past week. And then we also have Mark from Stakehouse instead of Rune. So he will be talking us through the protocol economics report as we anticipated in the forum. As always, if you guys have any questions, you can drop it in the chat, and we'll be happy to take the most relevant ones. So yeah, thanks everyone. Rajiv, if you want to take it away.
Thanks, Juan. So, since we didn't have a call last week, I've actually extended to a 14-day period just to cover. And I'm going to start with the wider market landscape because after our last call, we saw a rate rise from Athena, and I'm going to remove Biddle and usual. And just to comment on how we sort of calculate their APY, we actually look at the daily deposits they do from their staking rewards contract because there's a lot of off-chain trading period processes that they use. We thought this was probably the fairest to look at. But the net effect is their APY clearly distance itself from what we practice with SUSDS, and you sort of see the impact of that through the period whilst we've had a slight drop in supply for SUSDS. You can see that clear uptick with SUSDE, and later we look at some of the drivers for those inflows. But going straight into the Sky ecosystem and USDS, and I'm going to remove the impact of Sky Savings just to look at overall USDS, and you'll see it's pretty stable over the period. What we have been seeing are outflows from Solana, so two withdrawals from the bridge there, a small reduction in the USDS markets across Aave and Spark, but all of that has been offset by the new kid in the block, which is Pendle, and the USDS market there, driven by the recent Spark campaign on the Pendle points market. And I'm going to come back to that one because I think that's a really interesting use case to just sort of consider. Not much to report on token rewards, very stable through the period. Specifically for SUSDS here on the bottom right, what we saw again stable, a sudden drop over this last weekend on Friday. I mean, it was actually two whales who drove that, and they came back on Monday. But if we look at some of the drivers there, and we always look at Athena as the big driver. Athena has actually had two further withdrawals in the period, so they are no longer the largest holder of SUSDS. That pleasure now goes to the Spark USDC vault and continued momentum over there through the period. And also interesting to see the continued exposure that the Maple RWA pools are taking to SUSDS. That idle money that's looking to tap into SUSDS savings seems to sort of have this continued growth, at least through this period. And I mentioned the whales that we tracked. There was two of this often impacts the overall patterns that we're seeing. A drop on Friday. The two whales actually came back on Monday, both directly into SUSDS, but also into Spark USDC vault, and they held the funds at Binance over the weekend. I'm not sure what the driver is for that, but that's what we saw with SUSDS, and it sort of fed into the larger USDS trend we've seen over the period. And just to finalize, I did want to just touch on two comments on the wider market landscape. So we sort of saw the growth in Athena through the period, and it was interesting to see what's actually driving that. Um, Increased allocation from Spark is one of the big ones, but also Pendle. And Pendle, as I guess a yield derivatives market, holds a very large amount of Athena actually, not just across SUSDE, but also for EUSDE. Almost 90% of the EUSDE is held on Pendle. Also for usual, you can see the impact of Pendle there. So this, just as USDS has recently launched there, this is a very interesting one that we're sort of starting to track much closer. Maybe next week I'll have some dashboards that show more of a deep dive in terms of just Pendle's holdings across the various yield coins that we're tracking. But this is one where it's going to be interesting to watch just how much of an impact it has in terms of driving demand, because what we've seen is it can be significant. So with that, I'll pause one and then turn back.
No, I think that's good. Thanks, Rajiv, very much. I don't see any questions regarding this report. So yeah, thanks for that, Rajiv. And yeah, let's give it to Mark from Steakhouse. That's going to be actually showing the financial reports. Thank you, Mark.
No problem. Can everyone see my screen?
Yes.
All right, perfect. So I'm going to provide a brief overview of the Q1 financials, and I'm happy to answer any questions at the end of the presentation. So as always, we like to include a little legal disclaimer. This information is only for informational purposes, not financial advice. Please read the disclaimer before reviewing the report. So kicking off into the summary and highlights for Q1. Gross protocol revenue was 99 million, up 4% versus Q4. Savings expense was 70 million, up 102% from last quarter. Total DAI and USDS supply increased significantly, up by 3 billion, driven by a 2.3 billion increase in savings product demand. We also had a big return of the UniV2 LP, $124 million between the Sky and USDS tokens was unwound. And this brought a significant increase to the surplus buffer and significantly reduced the circulating supply of Sky. We burned 295 million of Sky tokens in Q1, which is equivalent to 12.3K maker tokens, since the smart burn parameters were updated in the February 21st spell. So that's a very large number if you kind of annualize that amount, since it was only 6 weeks where we were burning that much. So over to the consolidated income statement balance sheet. The protocol lost about 5 million in Q1, driven by the increase in savings rate expense, which more than doubled over the prior quarter to about 70 million. Operating expenses were also up 4.8 million, driven by a 5 million increase in launch project expenses. But total assets increased 57% to 8.3 billion, driven by PSM and RWA mints. And the last key metric I'll mention on this slide is there's also a significant increase in the surplus buffer, driven by that return of the USDS portion of the Uniswap LP I mentioned before. And while the protocol lost money in Q1, we also became the leader in DeFi savings products without any point incentives, no private LP deals, no gimmicks, during a quarter which I think was economically challenging when the market kind of topped for the presidential inauguration on January 20th and then kind of declined going into quarter end. So all in all, I would say this is a pretty strong quarter for the protocol. Jumping to the next slide, this is just a delineation of the revenue streams broken out by month, so you can kind of get a sense of kind of how things are trending, how they look versus last year. Where are these revenue streams kind of coming from? Overall, I'd say a pretty strong quarter and significantly above kind of the run rate where we're at in the middle of last year and prior year. Switching over to the balance sheet slide, here we can see the same sort of delineation just from a balance sheet perspective, where you can see the various types of collateral and vaults that we have for the protocol. And one thing I'd want to call people's attention to is this Sky Maker mints and burns section, the Uniswap LP return below in the bottom section. You can see kind of the impact of that return on the equity position of the protocol, which increased about 64 million. Some of that number is offset in February by the burner kicking on, as I said, on February 21st. And then looking into March, you can see like the decrease in equity from about 126 million to 105 million is really driven by the big amount of burns that were occurring in March, which decreased the supply at, I think, a pretty good time, especially relative to how we've burned historically. We took a lot of MKR Sky supply off the market at a pretty attractive price. Jumping to the next slide. This slide has ETH and ST ETH locked in various blue chip lending protocols and kind of tracks the share in ETH terms. So you can see in Q1, we kind of lost a little share relative to Aave. Aave grew quite a bit. And this dotted line below is kind of reflecting Sky plus Spark combined. Obviously, there's a lot of assets being kind of shifted from Sky Core to Spark, but we want to see these combined lines growing over time. Jumping to the next slide. Here we can see the kind of balance sheet composition for RWAs. There's a ton of increases going into the light PSM in Q1 as we kind of began the unwinding of Block Tower Andromeda T-bills and started the transition to the Grand Prix winners. So just temporarily high PSM exposure leading to some kind of under earning for the protocol, but that is already being rectified with the deployment into Grand Prix winners, and will just continue to be kind of a thing of the past as we get into Q2 financials. PSM exposure was primarily the driver of kind of the backing of USDS and DAI in Q1. You can see this unwind from Andromeda, which kind of peaked in February at about 1.8 billion, down to about 900 million. And how much the light PSM kind of increased as inflows came into the light PSM to mint the savings products. This is just kind of a breakout of where the backing of DAI and USDS kind of sits. So we have the crypto vault exposure, which is down slightly. The market kind of cooled off quite a bit, as I mentioned, after January 20th. There's a lot of inflows into the light PSM and RWAs as people were minting USDS to get into SUSDS and the USDS farm. Going over to the RWA section, we had about 42.6 million in accrued stability fees from RWAs in Q1, driven by that very high light PSM balance. That number will go down next quarter as we've moved into the tokenized T-bills from the Grand Prix winners, and we'll see kind of the money kind of start coming in from that T-bill exposure. And here's a breakout of the kind of key demand buckets that we have for USDS and DAI. So you can see EOAs and DEXs were down a bit, but savings rate products that really spiked quite a bit, growing over 100% versus prior quarter. And then pretty much all these other major categories, CFI, farms, bridges. We had base, go live, Solana showed some growth. As Rajiva kind of mentioned, Solana's down since the end of Q1, but compared to Q4, it was up a decent bit. This slide, we have just kind of the visualization of that data. So you can see, kind of how much the savings products have really grown over time, especially during Q1 where we had, a pretty high rate, which I'll go through on this slide. So you can see in this purple line right here, this is the SSR rate, which peaked in Q1 at 12.5% and then was cut all the way down to 4.5% at the end of the quarter. where it still stands today. The DSR has been tracking a little below that, of course. In this dark blue line above, that's the SSR deposits, which are trending up nicely over time. And then this red line on the bottom is, or this green line right here is the DSR balance over time, which is also starting to cool off, but is honestly performing better than I would have expected. I would have expected a lot of people to swap into the SSR product since that rate is at a premium. And actually, the SSR is, I meant to say, is the red line. The combined is the blue line at the top, which is seeing pretty, strong growth starting in Q3 until end of Q1. This is kind of the user demographics from like a wealth perspective, and you can see the $100+ million category in this light red color is really kind of what's driving the growth from like a user perspective. And just one quick last slide. So this chart shows the kind of growth in revenue by month, year over year, starting from all the way back in 2020. And you can see now in 2025, this light blue line at the top, and then orange is last year. You can see how we've made pretty steady progress as a protocol, as a community, as a DAO, over the past 5 years, growing protocol revenue. So, I think there's a ton of opportunity this year with the stars going live to just continue improving the capital efficiency and unlocking higher gross revenues for the protocol. But there's also a ton of opportunity for us to build complementary products for the ecosystem and really take DeFi to the next level. So with that, I will conclude the presentation. I'm kind of happy to answer any questions.
Thank you very much for that, Mark. Yeah, I like this chart. I've seen a few tweets out there that were emphasizing the fact that as you were saying in the beginning, there was a loss of 5 million. But as you're saying, there's potentially a lot of pieces moving and operational excellence to be sought. So it's I don't think it's something to be too concerned, at least not in the short term.
Yeah, I think with crypto Twitter and the media, it's all about everyone's trying to capture people's attention. And from my perspective, I would trade a $5 million loss for growing the supply 3 billion quarter over quarter. Obviously, we want to grow the supply, then improve the operating efficiency over time, and that'll kind of give us a lot of operating leverage and profitability in the future. But I think we're back into growth mode, building new products, a ton of exciting things coming with the end game plan. So I think Q2 and onwards will look very good for the protocol. Not financial advice, but I'm optimistic.
Well, I'll wait for anyone to. Again, guys, if you have any questions, feel free to drop them in the chat. Is there any type of announcements coming, or anything that you can advance, or is it still TBD in the future? Just hold and wait.
Well, I think from like a protocol perspective, obviously we've got the kind of sky staking starting, which is very exciting this week. And a lot of people are upgrading, I think, to take advantage of that opportunity. And I expect there to be a lot of positive buzz once it goes live. A lot of exciting announcements coming around ETHCC next month at the end of June and into July. Very excited to share some things that we've been working on the Stakehouse side with the community. But yeah, there's a lot of, I think, people, institutions, DeFi protocols that want to work with us. They're excited about working with us, know what the community's built over time. And so I think this is going to be a very, exciting year for everyone.
Yeah, nice. Absolutely. I've heard that there is something happening in FCC, so everyone try to keep your eyes open, because there might be some news coming out, and yeah. Yeah, I don't know if there's no questions. We can finish this earlier and give everyone back some time. Okay, there's Herve asking, do you have the same graph with margin per month? I don't know if that's something you have handy, Mark, or not.
I think we do. Let's see. Yeah. So this shows I'm assuming you want to look at the protocol kind of earnings. So this is the kind of breakout by month on this slide. You can kind of see all the revenue streams, protocol expenses, the DSR expenses, you know, a big driver.
Nice. Yeah, that's I think that's what you're looking for, Herb. He hasn't been put into a pretty graphic, but if you go through the slides later in the recording, maybe you can check that out.
Yeah, this presentation is also on the forums too. So
yes,
I can drop a link as well. Let's see.
So Coles is saying announcement of an announcement. Yes, I agree. It's not very promising, but yeah, just keep your eyes open and soon TM will have some exciting news coming. All right, guys. Thanks everyone for joining. Okay, I see one more question by Keima. Any visibility on cutting of OPEX for the rest of 2025?
Not from me personally. I know there's a lot of changes and kind of cuts that are in progress. I'm not sure if anyone on your team that's kind of tracking that one is maybe just able to shed any light there. But yeah, I do know there's a lot of work being done to kind of cut expenses.
Right. So something that maybe it's worth repeating, and we've been saying it for some time now. I think that the idea with Endgame is to have the core at 0, and then make sure that each star behaves as a kind of like as a business unit that's responsible for their profit, and to give them more independence. So that's a bit what we're walking through or towards, and the point is to get there as soon as we can, but not faster. So definitely we don't want to create any type of panic within the community and the contributors, and we want to keep things as stable as possible to make sure that we get there and we survive and we don't shoot ourselves in the feet. So that's a bit how we're thinking and what the rationale is, but we are working towards that objective for sure. There's another question saying, what exactly is the moonbow phase as detailed in this Notion page? I don't know, Mark, if you're familiar with that page. I guess we can leave this for we can leave this question for next week, guys. We can try to check those pages and have answers for next week. I think those pages are maintained by Atlas Axis, so if you have any questions, you can direct them to Le Bateleur, and I think he'll be happy to answer. We're going to ask him if he wants to come in next week. So yes, thank you everyone for your questions, comments, and as always, we'll see you around in the forum. Thank you, Mark, for coming, and thank you, Reggie, as well.